Hello and welcome to another edition of Stockwatch. So as we get into the middle of the trading week, we're hearing that a few more big multinational companies such as McDonald's, Starbucks, Coca-Cola and PepsiCo are all suspending their operations in Russia due to the ongoing conflict there. And what's the most important thing is they're suspending operations. They're not closing their stores for good. A lot of news outlets are saying that they're actually moving totally away from Russia, which isn't actually the case. Suspending operations for now. The CEO of McDonald's and the CEO of Starbucks have both said that they're just pausing all operations in the market. So we'll see how that's going to affect market price as well as this Russia-Ukraine conflict continues. Now, McDonald's in particular operates over 847 stores in Russia, and unlike a lot of its restaurants around the world, they're not really franchise based. 90% of them are owned by McDonald's themselves, so this could have a very heavy hit on the share price, and we'll look at the charts shortly to see where that's going to lead us as well. And you know, Russia's restaurants, along with 180 in Ukraine, which obviously are not being operated for obvious reasons, account for 9% of the company's revenue last year. So, you know, 9% is quite significant with such a big multi-billion dollar company. We'll see what's going to happen there for the next few months in particular there. So if we take a look on the chart, we're seeing at the moment, I'll just pull it back a little bit. Now we're seeing prices drop down to literally where we saw some of these second and third waves of the pandemic in the early part of 2021. And this is quite worrying for bulls and the company in general, as another slide lower will take us to probably as the prices of when the pandemic first hit the globe. So at the moment we're just looking at probably some psychological levels and another leg to the downside. And if looking at the RSI, it's very oversold as well, looking for any kind of divergences to give us a little bit of a boost to the upside. When the RSI does get to a place where it is vastly oversold, we usually see a bit of an upturn in the indicator. However, we're just waiting for that upturn as well to give us a more of a direction on where prices could go. At the moment I'm using the Ichimoku cloud for a little bit of direction, but on the daily chart, as you can see, the bias is generally on the downside. We're looking at this three-leg wave move to the downside, but at the moment, if we look on the 4-hour chart, most significantly, we are still trending far away from the cloud, and prices are now looking really bearish. So as I said on my previous Stockwatch videos, the market is generally fundamentally moving at the moment. So any other big corporations that are coming out of Russia or suspending their services need to know that the prices will be hit quite dramatically. And as we saw yesterday with Visa, MasterCard and American Express, we've seen these low prices, well, monthly low prices since the pandemic started, and we had the first and second waves of this virus hitting the globe as well. If we just look on Starbucks as well, again, similar trend. We're looking at the moment on these recent peaks, fundamental peaks really, and this sideways pattern was really coming into a pattern, and now we're just seeing at the moment what's the drop from here. So as you can see here, it was kind of like a small descending channel, you could say, but then prices vastly missed, dropped out, and now we've had this news that they're suspending operations in Russia, which is another hit on the share price as well. So trading vastly lower than the Ichimoku cloud. The only difference here is that we have a small bullish divergence on the RSI that could possibly pick prices up to back into this lower regression channel, but it's got a long way to go until that happens. We'll just have to wait and see what the news outlets bring us and what other indications there are from their CEOs and managers as well. Looking on the 4-hour chart intraday, when the market does open, we're expecting another slight leg to the downside and then possibly another move to plateau, basically, kind of like a small V-shaped recovery. But as I said, the market is mainly fundamental driven at the moment, so just keep an eye out for all the headlines as we go into the rest of the trading weeks. That's all for today's video. Just keep an eye out for the other companies I mentioned, PepsiCo and Coca-Cola, to see what their moves are, and possibly we'll look at them tomorrow to see what the opportunities are there. So join me tomorrow for more Stockwatch video. Bye for now.